Hello everyone, this is Defense Politics Asia, and so when I talk about the Chinese economy, a lot of people like to put this put this information, and this is of course factually correct that the Chinese trade surplus is growing and is now nearly 1 trillion, or just round it up 1 trillion. Okay, trade surplus. That means the country as a whole is earning $1 trillion, in trade. No, after no, you lose money to other people by buying their stuff, but you also earn money when you sell your stuff. So you 1 trillion. So it sounds like a lot, but I want to put things into perspective. No, it does not mean that China is becoming $1 trillion richer and period. It's not true. So I want to put things into perspective. Again, I just want to say this is not a China dooming video. I don't play that game. We just want to look at the reality. What is the real situation in terms of the Chinese economy? So you have to understand that the public expenditure in China is increasing every single year. They have been just increasing. And this is in billion of yuans. 27.4 trillion yuan. And that's how much is that? That is around 3 point something trillion US dollars. 3 point something trillion US dollars in spending, public spending. So this is a lot of money. So if you're talking about earning $1 trillion, and then by you're spending $3 trillion, of course you're losing. But then you will say, how about tax revenue? So I just want to show you is 27.4 trillion yuan is 3.7 trillion US dollars. It's almost actually coming to 4 trillion. The national debt is actually increasing. This is the sign. So I want to show you the tax revenue. Tax revenue in 2023 is 18.1 trillion. I would imagine 2024 maybe is higher. I'm not sure exactly. I can actually ask AI to search for me. China tax revenue in 2024. So let's see whether Grok, because I'm working with Grok. I nowadays I fall in love with Twitter's Grok. I think it's getting better and better. It's really good. 2024 tax revenue 1.1 trillion yuan. So yeah, we are looking at less than 18.1 trillion. I think in 2024. I think it's not reported yet. Yeah, the number is not out yet. So we do not know yet, but it's not more. It's not necessarily more than 2023. So just to put it, so let's assume it retains at 18.1 trillion. This amount. So let me 18.1 trillion. Okay, let's put 18.1 is 2.47. So this is tax revenue. So the 2.47, and then we're gonna add into 1 trillion, 3.47 trillion US dollars. But in 2023 they are already spending 27.4, which is already 27.4, which is already 33.74. They are losing money. Generally, they are putting on debt, and that's why we can actually see it here. They are putting on debt, and definitely I'm using a very simplistic way of counting, and you can see from this percentage in terms of GDP is actually increasing. They have already went above 100% of their GDP. So this is already terrible. So it's getting is increasing. So let's compare it to United States. In United States, the current debt to GDP is 123.1%, and so I'm not sure if we can click this to show a graph. Do you have a graph? So you can see that this is the total percentage percentage to GDP. So this is, I would say, average out 120. Can we still look at the 10-year graph? Do you have to get this data? Yeah. Oh no, I'm not a student. No. Yeah, but we can see this. So previously it's actually just above 100% for in the United States, but not 110. And then there is a shoot up in 2020 all the way to 125, and then 130 and whatnot. So this is the United States. So you can actually see that the debt situation debt to GDP situation for China is getting United States level. Let's say they are not, but they are getting there. Okay, and this is, oh sorry, this is 2029. So this is inaccurate. Sorry, I see wrong. So it's 90%. It's not that bad. Then 90% is not that bad. Though, but they are raising. So this line is actually the expectation of how they will grow. So I see the wrong year. Freaking hell! Why did they put the estimation? Okay, so to 90%. So not that bad. That means they are not yet at the United States level, but they are increasing very sharply. You can see how much they went. So the danger is now that they are now continuing to move. So let's say if this trend is continuing, they will reach United States level of debt problems in 5 years. So in 5 years. So that is a concern for the Chinese government. And which is also why I say this $1 trillion in surplus is literally needed for China. They need it. They need to continue to increase the trade surplus. They need to continue to dominate markets. Be it in EV, like in electric vehicles, which they have actually dominated the market. They accounted for 70% of all EV and hybrid sales in the whole world. In the first 11 months of 2024, and that is real. I'm seeing more and more China electric vehicles, but I think it's not enough. They need more. They need to sell more. This is the problem with the China's economy. They are very different from United States or Russia, because United States and Russia actually have natural resources. They actually export natural resources. I can tell you, Russia's economic situation is actually better than China. So, which is super weird. Despite they are very sanctioned, if you really put the numbers all together, Russia is actually making money, and they're spending all the excess money into their military, and they are running low on workers. They don't have enough workers because a big chunk have went to war, and then there is a elevation of a lot of industries. A lot of it, because they have all the European companies left, so they need to start a lot of factories, a lot of new industries. Then of course the military industrial complex needed more stuff, and then that will also spur work. So there's a shortage of workers in Russia, and the economy is actually in certain perspective is actually booming. And the fact that they sell oil and gas, these are all just pure profit. They just pure income. So when China is different. China, they don't have all these things. They have to sell stuff. They have to trade, and they are spending. They had not just now. I think now they're not spending as much because now they are just paying interest on debts. But they have spent so much on infrastructure, and I think the upkeep of all this infrastructure is also costing a lot of money, which is adding onto the debt. All these beautiful buildings and skyscrapers in literally every single Chinese city. Every single Chinese city is now pretty, super advanced. And they build the bullet trains and whatnot. All these cost money, not just to build, but to maintain as well. And on top of that, because they have been so cowboy in terms of the way how they run the economy, they have to deal with the property bubble right now. The property bubble burst, and then the government is now bailing out all this real estate, and it's costing money as well. So there's a lot of high unemployment, especially with the youth in China, and these are all things that you cannot see just by looking at this headline. This headline is actually very misleading. China's trade surplus is the only thing that is driving China's economy. You have to understand that this trade surplus is what is the selling of shit to all around the world, and they are good shit because I buy some of this shit for my new house as I renovate. A lot of things is all coming from China, and the products are getting really good, but they need more. They still need more, despite they have already dominated a lot of industry. They still need more because that is the only thing that they can to earn money, and this is the conundrum and the plight of the Chinese government that you don't understand. They are super worried. I can tell you for a fact, China government is very worried. And that's why Ukraine war was a godsend, because it relieved them from certain geopolitical pressure, and they open up a new market in Russia, which because they are now replacing European products, and also they are able to get cheaper energy through Russia, and that helps to control their debt situation. But the thing is, they are not able, and is probably will never be able to clear their debt, because they are a resource poor country. The only thing they have is manpower. Like, they have a lot of manpower, but natural resources insufficient. They have to import a lot of stuff, and so we are talking about the trade surplus. They earn all this $1 trillion, but they're still spending a lot. So that is the main gist of the issue. I believe for China, they need to go up to 1.5 trillion in terms of trade surplus to really get ahead of their debt and start to pay off their debt. If not, what you're going to see is that this number will just continue to flow as per this estimation. So 84.38 is the confirmed number, and then 2024 is already kind of like an estimation. There's an asterisk already, and this thing will just keep climbing if they are unable to bring in more trade surplus. This is why the threat from Trump on China is so significant, because anything that will shake the Chinese trading, manufacturing, is going to impact them more severely than you think it would, because we are talking about the massive spending. Their public spending is way high, way too high. All these beautiful stuff need to be paid for. Beautiful trains, beautiful houses, and roads. So everything is beautiful. I can tell you 100% they are 10 times better than what you have in United States or even in Europe in many cases. The problem is expensive, and they are struggling to balance this thing. So I would say that China will continue to push to improve their trade. They continue to try to compete with every single industry that they can, because they need to bring in more money so that they can pay for all the crazy spending that they have done over the past 20 years. Everything that you do, they spend, have to be paid for. So that is a big issue. But of course, China have its own ways to go about things, and they are not a normal country. A collapse doesn't come so easily, but the collapse will come easier than United States, because United States ultimately still have the US dollar. They are still the global reserve currency, and China is hoping that at least the Chinese yuan can become a part of maybe a BRICS reserve currency, a new currency based on BRICS, or BRICS new currency from BRICS, and then they can have a small fraction of it, and that will help them to move their debt away from their country. So, but no, that is still beyond. They're still not so near yet, because all the other BRICS countries is suspicious of China. not just India. Russia is suspicious of China as well. No one want to save China if they know the real situation, and can tell you the Trump administration know the real situation of China, which is why the trade war that was happened during his first term was actually pretty successful for Trump until the COVID hit them. So anyway, whatever it is, yeah, you can take this whatever direction you want. You can don't believe me, it's perfectly fine, because ultimately you and I don't live in China. Just enjoy all the cheap China goods, and just enjoy it for as long as you can, and as long as China can produce them, and then yeah, we shall see how things develop later. So yeah, thank you for watching. Press the like button, subscribe. I'll see you guys. No, not China dooming. I'm not China dooming. I'm just telling you the reality in China. There's not dooming. There's not doom in China yet. Not so easily. 90% debt in 2023 or 2024. It's not that bad. It's still doable. Over 100% is the problem. So yeah, that's it. I'll see you guys in the next update.